Supply and demand has become one of the most popular trading strategies that has enabled day traders to generate enormous profits in the forex market till this very day. So in today's video, I'm going to help you understand how to identify supply and demand zones, when to enter a trade and when to take profit. Welcome back to my YouTube channel. I'm Max Cutler, a show where I teach you everything day trading to help you become profitable on a consistent basis. To start off, guys, we have to understand this question. Who really moves the forex market? Number one, we have small scale traders, that is us retail traders with a turnover more or less than 100,000 US dollars. Number two, we have medium scale traders, that is the brokers, prop firms, etc. These guys have a turnover of about 10 to 100 million US dollars. Number three, we have large scale liquidity traders. Here now we're talking of the big banks, the big guys now. That's your JP Morgan's Chase, which is probably the largest bank in the USA and one of the biggest in the world. We have got Bank of Canada, Swiss Bank, Goldman Sachs, HSBC, and several others. These guys right here control the whole forex market exchange, which has a trade volume of about 6.6 trillion US dollars each and every day rotating in the forex market. Now, if I was to start over as a beginner, I definitely start off with supply and demand zones, because this way that you get the gist of how the forex market evolves over time. Now, let's hop over to the charts and explain everything from there. Right. Now we have this chart over here. We can see over here, we're just gonna draw some zones right here, and then I'm gonna scale fix this chart so we can make some good illustrations. Now, this is the market is moving up, making a bullish momentum to the upside. The market retraces, the market reaches the high, makes a higher high, makes a higher low, is on an uptrend, mind you. And then the market pushes all the way up again. Now, if we are to ever anticipate a buy into an uptrend, then we are most likely waiting for the market to retrace and then enter into a trade going to the upside. Now, we are just gonna wait now. Now let me change this so I can show you properly. This is a support zone. There's a support zone right here. And then what we are going to do now from the next moment is to wait. For the price to retrace. When the price retraces like that, that's what we call when the market is going to the downside. When the market is moving with momentum to the downside, we call that supply. Now let me show you. If it moves on like that, we're just gonna wait for price to respect this area of support. When it respects that area of support like that, we're just gonna wait for price to move back upwards like that. And then we're gonna anticipate a buy over there. Then we can just place from this moment, when the price crosses this line here, we enter into a buy going to the upside. Now let me show you some real examples on the chart. Now we're on a gold chart, the 30-minute chart, because that's where we enter into our trades. That's where we analyze and then anticipate whether the market is breaching to the upside or breaching downwards. That is, we trade in breakouts. Okay, so now we're just gonna remove all that and then analyze properly. Let's start off. Let's scale fix that. Okay, it's good. So now, as you can see, this is what the market basically does. The market will have a high momentum going downwards. This is what the market did. It moved all the way down like that, and then it created some sort of support. So price, whenever it goes up or down, it leaves traces, like everything in life. Success leaves clues. Same with the forex market. It leaves clues behind so you can know that the big players are coming in. So you'd most likely want to follow these big players for whenever you want to anticipate whether you want to go on to a buy or a sell in the market. So now we're just going to wait for the support to be confirmed. You can see right here, we formed a beautiful support right here. And then what did the market do? The market pushed all the way up. Market went all the way down, and then it formed support. So that was a beautiful thing, and the market moved all the way up like that. So right now, you can see there's a double bottom. Whenever a double bottom forms, what you have to do, man, is just to wait. It's just to wait for price to make a confluence. A confluence, you can see price did move and then respected this area of support right here. Once price respects an area of support, you'd most likely look for bullish candles. Whenever bullish candles forms in a level of support, then you're most likely looking for bigger candles with a huge rejection from that area. So whenever a plane takes off, you'd most likely look for a huge combustion from those turbines and engine. A huge rejection that we are looking up for, so that the market continues accelerating into the desired direction, which is an uptrend. So this is what the market did. The market did reject. You can see these huge rejections to the downside, and then the market did what? The market pushed all the way up. The market pushed all the way up. So right now, we have to be willing to look for those zones. You have to have that definitive eye. And psychology comes into play too. You have to be willing to manage your emotions in a trade, managing yourself in the trade, so you can be able to participate in this forex market exchange. So right now, we're just gonna move on to the 1 hour time frame. We're moving on to the 1 hour time frame. Let's remove all that. You can see that was a beautiful rejection. It moved all the way up for like 291 pips, all the way up, mind. Okay, so now let me show you. Price moved all the way down. Price managed to make a lower high, and then the third leg right here. If you have ever watched one of my videos, then you'd know exactly what I'm talking about. Okay, then price managed to form a fourth leg right there. So when you see these candles right here, when you see big candles rejecting off of a significant zone like that, big candles with big wicks forming like that, then you'd most likely want to take a buy from that point. You'd most likely want to take a buy from that point. Mind you, you'll be managing risk. You risk 1 to 2% per trade. Only 1 to 2%. You enter onto a trade with a 1% risk on a $100 account, you'll be risking like a $1. On a $1,000 account, you'll be risking like a $10. That is your 1%. Okay. Then you enter a trade, it rewards you nicely, you take profit, and then you let the other runner continuing to your highest levels, because that's how you grow into the forex market. You close 90%, you leave 10% behind, and then let the rest run for the day. Okay, now you are just gonna anticipate that price will reach to this level, and then you close your profits about this level, and then you continue on with your day. When price breaches to the downside and then breaks you, then that's fine. You secured profits and you're good to go. Like I already said earlier, let's now take on a live trade to show you as an example of how to trade this supply and demand strategy. Now, we head over to the chart. There's the gold right here. There's gold, as you can see. Now we're gonna move over to the 30-minute time frame. Scale fix this. Okay, scale fixed. So we wanna move it where we can easily show what's going on right here. You can see price did make a high momentum going to the upside. We can confidently say price is in an uptrend at that moment. So what do we do? Do we have to enter a trade when price reaches this point and place on a buy? No, 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 no. We're gonna wait for price to pull back and then possibly look for support. If it breaks below that level, then we're possibly gonna be looking for sales if price breaks a level of support going downwards with momentum. But if price respects that level of support, we are possibly going to be looking for buys at that moment. That's the smartest way to be trending with trends. If price is on an uptrend, is on a bullish momentum, you are likely gonna wait for price to retrace and then enter into a buy. Same applies when price is in a downtrend, is on a supply. You're just gonna wait for price to retrace up and then to create a level of resistance. And then most likely what you're gonna do from that point is to wait for price to respect that area of resistance. And then most likely what will price do, it will reject that level and then form some bearish candles, and then you are likely to enter into a sell. So that's what we're going to do from this point on. So now we're just going to remove that. Scale fix that, and then enlarge our charts right there. So right now we're just going to simulate this and let price evolve, and then we can wait for price to print something that we are most familiar with, something that we recognize, something that we have seen printing before. With experience, this is where experience comes on. It will save you time and your capital as well. So now we're just gonna wait for price to print something that we recognize and then take part. So now let's see. Let's see what price does. Okay. So now we're just gonna wait for price to pull back, create some sort of support, and then push all the way up. By the moment it creates a first bullish candle, we're most likely looking to participate into the market. And then we're just gonna wait for the next candle to form, and then it wicks down, and then we're most likely to look at for a buying trade. Okay. Price can never move all the way up. It inhales and exhales, exhales. That's when price moves on to an uptrend, consolidates, move on to a downtrend. Downtrend moves on a downtrend and then consolidate, and then it moves into an uptrend. Price will never move on a one direction movement. If so, then everybody will be a millionaire by this time. So price will skin you alive, guys, if you're not willing to wait. You have to be willing to wait. That's where psychology comes in, as we're talking about supply and demand. You have to be willing to wait. Okay, now let's watch the trade evolve. We can see it's forming a bearish candle, rejecting that area. So price, as we can see right there, it's rejecting this area right there. We can now confidently say that's our area of resistance, about that level. Okay, so now let's see. Mind you, we are on a 30-minute time frame, a sweet spot for making an entry whenever you trade in gold. price hasn't yet formed a lower wick on the previous 30-minute candle. So now we're just gonna be waiting. You can see some few rejections off of that level. Maybe by this level, we're expecting price to like create some form of support there, and then we're just gonna wait for a bullish candle, and then we're gonna participate into a buy. So now, right. So now we're just gonna lower our risk 1 to 2%. So we're quite confident with experience. I've seen this happen before. Then I'm confidently risking 2% because already you can see right about this level. I'm risking based off of leveraging my account. Already I've gained 9.87%. So it's quite frank that I'm risking 2%. You'd find somebody risking 2% and he has never made even a profit into that account. What are you doing? That's the best recipe for failure. The best recipe for you to win in this thing, you have to leverage off of your profits. If you have made gains from Monday, Tuesday, Wednesday, Thursday, then on Friday, it's quite logical. On Friday, it's best that you risk maybe 3 to 5% of your account. That's how you basically start to compound your account from a $100 account to maybe $150 account. Or if you're on a $1,000 account, you may be gaining like $500. Consistently. So that's what we're doing right here. So now we're just gonna risk. We are just preparing a risk. That's if our setup is met and then the support level is met, then we might anticipate a buy off of that movement. Would want to see price retest this high over here, then we are possibly gonna close about 90% or 80% of our profits about that level, and then leave the rest running, to accumulate more. Okay, so now we can see now price is rejecting. Price has just rejected, and a bullish candle rejected. Now what I'd want to see is for price to reach this level right here. If it reaches this level right here, I'm entering on a buy, and then placing my stop loss below the this current level of support, which is 47 pips. So I'm just gonna do that. If price reaches about this level, let's see the price. If it reaches 1779.445, that's when we are most likely to enter and trade. For now, we're all about waiting. We're on the patience game right now. Patience game for the big boys. Okay, that's what we do right now. We're waiting. We're just waiting. Price is on a downtrend, is on a bearish momentum right now. Price is rejecting that level. So we are most likely looking to create a support in order for price to move all the way up. That's what we want to see in this moment. That's what we want to see. Okay now. If price now comes to break its own high, I'm confidently placing a buy. Okay, good. Now from this point right here, this is where we enter into a trade. We're just gonna pull up our risk management tool right here. We put on our take profit about this level, just above the level of resistance. We put on our stop loss, accept, then let's watch the trade evolve. Already we're in profits now, guys. Here's what you do. You see price make a rejection. It takes some time of rejecting a certain level. You basically have confidence in one of your confluences. You know, your strategy on the standards that have to be met for you to take a trade. Now our confluences are met. We fully took on a trade. Now let's see how it goes. You can see it broke the high of the previous the low of the previous candle. You see, now it's moving all the way. Let's first execute this and see how it moved. Ooh, already in profit. Ooh, it took us up. It took us up. You can see right here. You can see out here we gained of like 85 pips on gold. So now that's it basically, guys. You've seen how we execute our trades. You've seen how we level up our zones, our supply and demand zones, where the big banks come with liquidity to enter into a trade. We've seen the waves in which the banks get to trade into the forex market. And basically, guys, you have to master your psychology, your emotions into the market. You have to know the kind of person you are into the forex market in order to manage yourself in future. So basically, guys, that's it from me now. If you like more of this content, click the subscribe button, like the video to see more of these videos, guys. Until next time, ciao.